Hello, let's take a look at exercise 8-9. Here we're given the absorption costing income statement for a year for one company, and then we're given some additional information. Selling and admin expenses consist of $300,000 per year in fixed expenses, $3 per unit sold in variable expenses, and the product cost of $21 here is broken down this way. We're asked to redo the company's income statement in the contribution format using variable costing. Okay, so either way, sales are going to be the same. Then nothing changes there. So, sorry, let me scroll back up. So sales, 40,000 units at $33.75 per unit, $1,350,000. Now, under the absorption costing method, you're going to have your cost of goods sold, whereas under variable costing method, you're going to have variable expenses. So try to remember when you're doing these on exams, put in your headings. I do a lot of few little marks for proper headings, so having variable expenses there. So the first one is our variable cost of goods sold. Now, we know that there were 40,000 units sold. And let me flip back again. But our cost per unit here is $16. And that is, under absorption costing, we include our fixed manufacturing overhead. We take that full amount and divide it by the number of units to get an amount per unit. Under the variable method, we do not do that. It's just direct materials, direct labor, and variable manufacturing overhead. So, I'll scroll down here. So it's just the 10 and the 4 and the 2 for 16. So our variable cost of goods sold is 40,000 units sold at $16 per unit, which is $640,000. And variable selling and administrative expenses, again, 40,000 units sold. But we're told in the question here that selling and admin expenses, $3 per unit sold in variable expenses. So that's where we get our 3, and we end up with 120,000. So the total then is 760,000 of our variable expenses. Sales less variable expenses is contribution margin. And again, that's a little difference. Under the absorption method, we have cost of goods sold, not variable expenses, and we have gross margin, not contribution margin. So again, on an exam, there would be it's not a lot of marks, but there would be a little bit of a mark with this. So try to get in the habit of doing them with the proper headings. Then we subtract fixed expenses. So under the variable costing method, all of our fixed expenses get deducted down here. Fixed manufacturing overhead of $250,000, and we get that $250,000 right here. Because under the absorption costing method, the full fixed manufacturing overhead gets broken out to each unit, but here we don't. We subtract it all down below. So the full 250 comes off here. And fixed selling and admin expenses. Well, told us in the question here, selling and admin consisted of $300,000 in fixed expenses. That's where we get that number. So our total fixed expenses are $550,000. which gives us an operating income of $40,000. Then it asks us, reconcile any difference between the operating income for variable costing income statement with the operating income on the absorption costing income statement. Okay, always do these the same way. Start off with your variable costing operating income, which we just calculated up here is $40,000. Then you either add fixed manufacturing overhead costs deferred in inventory, or you subtract fixed manufacturing overhead costs released in inventory. And that'll bring you to your absorption costing operating income. So what happened to our inventory? So if we look here, we can see manufactured was 50,000 units, sold was 40. So they made 50,000 units that year. 40,000 units were sold. That means there was 10 units left in inventory. 10,000 units. So here we have our 10,000 units. Then we have to attach a cost to those. Well, it was already calculated for us right here. Fixed manufacturing overhead, it was total of 250,000. Then that gets spread out over the 50,000 units that were produced. So it's $5 per unit. So each one of those 10,000 units sitting in ending inventory has $5 of fixed manufacturing overhead costs attached to it. So 10,000 times $5 per unit, 50,000. You add them because we're adding here because the cost was deferred, and we'll end up with the amount of our absorption costing operating income of 90. And let's go back and check, and we can see here 90,000. So that's it for that question. Just remember, always do these the same. Start off with your variable costing. You either add or subtract if overhead costs were deferred or released, and you end up with your absorption costing.